Good morning. This is Tom Aspray with the Viper Report. It's Tuesday morning, September 28th, a couple hours before the open, and I think this picture sort of symbolizes how a lot of people have felt about the stock market really for the last month or so. It's lots of knee jerks. Last Monday's powerful decline finally got some investor attention, which I thought was warranted as the risk had seemed to be high in the last 4 to 6 weeks. That had sort of been my view in my Forbes article. Last weekend's correction over, still a mixed market. I really wasn't convinced that the correction was over, but the rebound last week was impressive. A couple of weeks ago on the 12th of September, there's more evidence of a correction, but no signs of worry from investors or traders. Then that following Thursday, we had a plunge in bullish investor sentiment, leading to the recent sharp market decline. I thought the action early in the week will be important. You can see it was really a mixed close on Monday. Dow was up 71 points. It was up over 200 for a good part of the day. You can see this intraday chart here, of the Dow. Shows like it peaked early in the morning on very strong oil stocks and financials, and then sort of drifted lower for the rest of the day. NASDAQ got hit the hardest, down 0.5%, and S&P down 0.28. Russell was up 1.5, and the VIX was up a bit. Market internals were positive, so that's further clouded the short-term outlook, as I mentioned in Monday's reports. After last Monday's drop below the Stark bands, we were looking for a rebound Tuesday and Wednesday in our special updates. Let's look at some of the market internals. This is a chart of the QQQ. After last Monday's sharp drop below the Stark band here, we were looking for a rebound in our special updates on last Tuesday and Wednesday. Back to the 20-day EMA. That's pretty much what we've gotten so far. But there's really no conclusive evidence that this rebound is over yet, because we closed well off the lows on Monday. AD line is pulled back. You can see it still forms lower highs. The high last week was below this high. Closed right on its moving average. So that means the AD numbers today, are likely to be quite important. OBV also shows up basically a negative pattern. We broke the support going back into July on that recent decline. This is a chart of the SPY. Obviously tracks the S&P 500. It also came back to that 20-day moving average and formed a doji on Monday. AD line improved slightly. It closed just barely above its moving average. I mean, literally like 25 issues. So, if we get some good, strong numbers today, it'll look much more positive. Resistance right at this peak here. OBV, does not look good. And it looks more bearish and more consistent with a failing rally. Of course, the Dow was the market leader. This is the DIA that tracks the Dow Industrials. You can see we spiked up here into resistance. We had a high of 350.50, going right back into this high, which is 350.57. Closed on the lows. AD line here made it back to its moving average, but closed slightly below it. OBV, like was the case for SPY and the QQQ, all look negative. Well, the current action overnight does not favor a continuation of the rally from last week. You can see this action in the futures. We're down sharply, down about 40 points right now. As I noted in yesterday's regular Monday report, you can see we had lower highs here in the MACD HIS, and the MACD lines, crossed, turned negative during the day. Right now, we're right down back towards the, the Stark minus bands. So we're a little oversold on a short-term basis here, down in this 43.80 area. Resistance around 44.23, and then in, the Stark Plus at 44.46. So roughly about a 60-point range in between the Stark bands. The ways these things are dropping sharply, doesn't suggest we should look for a quick turnaround. More likely, best case scenario, a rebound back into this area, and then, maybe a drop back test of the lows, which I'm still looking for, as the market is likely to frustrate everybody for the next couple of weeks, unfortunately. What drove the market on Monday was the value stocks. Pointed out on Monday's reports also that the ratio, that's of the IWF, that's the growth Russell 1000 ETF versus the IWD, which is the value, looked like it topped out last week, and of course it was down even more on Monday action, so it looks like it should drop back in at least to this August low here, and possibly all the way back to this low right here. You can see that going back. Let's look back what we were saying about. We talked about how healthy it was in terms of the AD line, at that point in time, and pretty much most of the analysts were pretty skeptical of the market way back then. We weren't, but we turned much more cautious as we got into July. This is how the ratio growth to value looked in June. Nice bottom formation here in early June. The ratio didn't make a new low, maybe just almost a new low. MACDs showed a pretty positive divergence here, and it's been pretty much a growth play. Back to the current chart, you can see that this was the low we just talked about. Bullish divergence to May, nice bottom. The MACDs are positive. Last week, even though we got a breakout above this resistance at line B, I thought we would see more. We didn't, and so we've dropped back in, calling the breakout into question. The weekly and monthly still favors growth, but the next month or two may change that. Lower highs in the MACDs, that's always a warning sign. They're both now negative and declining. So, we're looking for a pullback in some of the value areas to establish new long positions. It looks like it might be one of those rotations where the overall market is sloppy to lower, and then some new market leaders emerge. So that's all I have for this morning. Thought I'd get this out to you instead of a written report, and hope you find it enjoyable. If you're not a subscriber to either the Viper ETF or the Hot Stocks Report and want some specific market analysis and recommendations, you can go to viperreport.com. You can click on the Viper Report tag here. Sign up, $34.95 a month. Cancel anytime. We send out lots of quality information and a unique perspective on the market you won't hear on CNBC, Bloomberg, or anywhere else. Or if you're into stocks, the Viper Hot Stocks Report. Hope you'll consider a subscription. Thank you.